And joining me on the podcast and on video, it's Alan Green. Alan, thanks for getting up Saturday morning, for doing this.
No, my pleasure. Just in my newly decorated office. You can see my Spurs calendar on the wall over there. Yeah. You see that?
Well,
Yeah.
we did discuss that. To me, it does look like a doctor's surgery, and that looks like human anatomy. It looks like, right, sit down there, sir, bend over, cough. Oh, okay.
Oh, yes. Yeah.
No,
No,
it's that old joke, isn't it, with a guy,
that's right. Cough.
a man goes to see a doctor, and he says, okay, just come on the screen, take your clothes off. Right, come back here. He said, right, I'm going to examine, the lower area for you. Just bend over. And the patient said, "Oh, I felt something, going up there." But the worrying thing was he had his both hands on my shoulders.
Yeah, I've heard that one. Funny enough, I was in a cafe in Seaford this morning, and the Grandmaster chess champion Gary Kasparov was in the cafe as well. And
how did you know he was there?
Well, I asked him to pass the salt and pepper. Took him 26 minutes. No, I happened to see that. I thought that was really good. I happened to see that one on. I think there was a TalkSport video. Ali McCoist and Jeff Stelling, and I don't know. It just tickled me for some reason. Anyway, that's Saturday morning jokes out of the way.
Let's go straight into the chart. I was looking at the AIM all share. It's been struggling, the AIM all share. Like, the trouble with the AIM, like, so it's a lot of questionable companies on AIM. And in fact, you cover most of them. Only kidding, now. No, it's a lot of questionable companies, and it's an indices of AIM gets a bad rap, right? For a lot of these companies that have been on AIM for a long time, all they've ever done is raise money, and there's no real value generation there. And of course, AIM is an index or a market where people are sort of, new companies are supposed to come, raise capital to accelerate their growth, then become a business, hopefully that's profitable. A lot of those companies don't achieve that. They just, there's been so many companies that you mentioned that have literally been raising funds for years and years and years and years.
Yeah.
And you think, what the heck? In fact, I did do a Twitter poll once asking which company, and I said at one point, and I think this is quite a serious thing, the reason why the AIM index suffers is it's being dragged down by these companies. When it was free money, pretty much in the last 10 years before interest rates went up, it was easy to keep afloat and raise money, and create these zombie companies. But now they're struggling, it's dragging the index down. And part of me thinks, if you're on AIM for 10 years and you're not generating a profit by then, I think you should get it off. I just think, what's the point? How long does it take? 10 years is enough, isn't it?
Well, yeah, you can also look at it though. The cost of listing on AIM and maintaining the annual AIM fees, and also the cost of advisors and so on. These companies would probably be better off in the private sector, because then they wouldn't have to pay those fees out. But equally, if you want to engage with shareholders, get shareholders to buy your shares and engage with your growth story, then you need to be listed. And
it was a catch-22, isn't it? I mean, I've seen a lot of companies delist recently. I said, well, good, because basically they are very, they're very high cash burn companies. They're not generating any revenue or anything at all. And they say we're better than the private markets. Now, I don't know if that's true. I mean, because, at the moment, the stock market is so low on the private companies are valued more highly than listed companies. That's not the way it be, really. But I think these companies, some of them need to be on AIM to raise the funds. But at the moment, raising funds is so hard. So it's like, what do they do? If they go private, can they secure the investment they need? So they have to be on AIM to raise the money. I mean, some of them can raise. They can raise money, but it's an awful discount normally. And it literally, hammers the shareholders.
Well, you're absolutely right about the private sector. I mean, at Minds of Money last year, I interviewed Neil Elliott, who's head of commercial or head of communications at Cornish Lithium, and they were talking about the developments down there, but also they just secured a 25 million loan from the UK Infrastructure Bank, and of course there was no dilution there because they were a private limited company. Another company I interviewed recently, a company called Clarion, Clarion with a K, Klarian. This company, Cat and I PLC, also have loaned them money in the past, but they've just raised 600,000 on Crowdcube, and they're over subscribed. I mean, they're aiming to raise 400,000, so they're well over their target, and there's still more money coming in. And of course, it's non-dilutive. It's well, obviously it's diluted because the shareholders are being issued shares, but those shares aren't liable to fall in value because it's a private limited company, and that's
Yeah,
there's
they're
a lot of
illiquid. You
activity
can't
there
sell them.
now.
Essentially, very very hard to sell them, isn't it? You can't.
Well,
How do
there
you
is
sell
that,
them?
yeah,
You know?
but there are all the appropriate warnings on Crowdcube for investors seeking to make those sort of investments. But there is an opportunity, I think, when the company's A, got a growth story, and B, it's got an exit plan, which I'm sure Clarion will have. But at the moment, that's the situation. But as you and I both know, just having been in the markets for many years, it can turn around very quickly indeed. And
Yeah,
if the
well, that's it. I was reading a report saying his AIM dead and all this, and IPOs dried up. And I thought, well, yeah, they will do because if you look at it, I mean, I looked at the stats. I think it was City AM I was reading. I looked at the stats, and typically the most amount of IPOs happen just before the end of a bull market. Right,
yeah,
it's when everyone the markets are rallying to their highs. There's plenty of people who want to invest because they think the market's going higher. It's almost like there's no top of this market, it's going up. And so everyone, no one's risk averse then. Everyone's just, investing in anything.
yeah,
And so
pile
there's
in.
plenty of money around. And then all of a sudden, the stock market crashes. And right now, here we are at AIM towards the bottom of the market. And there's very few IPOs. Why? Because literally a lot of people lost money. People are very risk averse. You've got high interest rates anyway. But I mean, oddly, this is probably one of the best times to list if you can get it away, if you're a good business, because over the next few years, the markets will rally,
Yeah,
and
yeah,
so
yeah.
there we are. Anyway, let's
No,
talk about go on.
yeah, no, I think you're absolutely right. I think there is a real opportunity now. I think we are at the cusp of that opportunity. We also these macro factors we've also discussed before. We have the US election coming up, and that's going to it's the certainty, it's the uncertainty at the moment, and I think a lot of investors are keeping their powder dry because of that. They don't know what the outcome is going to be, whether it's Harris or whether it's Trump. At least
And the
there's an
budget, I
outcome
think, in
then.
this country as well. The budget is like a huge uncertainty. It's
The
like
budget as
Keir
well.
Starmer,
Yeah,
Richard
yeah.
Reeves talking about. In fact, I read. Do you know what? I read something last night. It was very interesting about capital gains tax, and that they're worried about the capital gains tax being more aligned with your income and all that stuff. So if you're a higher earner, and people who tend to have capital gains, that's liable tend to be higher earners. So, at
Yeah.
the moment, it's 20%, I think, top rate of capital gains tax, isn't it? But it could go up to 40%. And so they're saying a lot of people are selling before this budget comes out.
Yeah,
And
yeah,
I think,
yeah.
well, there's no rush really because it's not going to come in force probably till next financial year.
Mm.
And you've got this probably a Santa Rally. And the best years of the market are November, December, January, February, up to April. So you may as well wait. But in fact, the cap gains, I think, for August, after they did this speech, gloomy speech and worries about so capital gains collection for August was the highest, I think, since 2008. So
Mm.
maybe people are selling ahead of this. And so I think whatever's in the budget now, it's sort of priced in. And I think, I also think they're going to roll back on a few things that they've not, because they realise it's not going to take any money, like non-DOMs, and even winter fuel is not going to produce that much money, and other
Mm.
things they're worried about. So I think a lot of worry now, uncertainty is priced in, and that's when
I
you're in
agree.
that area where it's so uncertain, people worry the most because they don't know what's going to be. People in their heads think, "Oh, it's going to be awful," and it turns out I don't think it will be as awful as they think.
But as Warren
I think
Buffett always
after the
said,
budget, the budget will rally. I think the budget after the budget, the markets will rally. You got also in November, you got interest rates coming down, 90% chance of interest
yeah,
rates coming down again. So
Bank
and
of
that's the
England
biggest
governor
driver in the markets.
has already flagged that.
Yeah,
And as Warren Buffett always said, buy when there's blood on the streets.
yeah.
When the market is looking this most unattractive and all the signals are really really poor and that the market's underperforming, that's the time to get in. It
Yeah,
really
it's
is.
odd, isn't it? The most classic saying ever, the biggest cliched saying ever,
Mm.
buy low, sell high. Now, it's quite hard to know where the relative low is and relative high is. But when you look at those, sort of metrics like IPOs, for example, you should sell when IPOs are breaking records. That's the top of the market pretty much.
Yeah,
And you
Right.
should actually buy when IPOs are at an all-time low,
Mm.
because that's the bottom of the market. You can see, and it's the same thing. That is, but the market's in the opposite thing. Everyone's sort of buying at the top because the IPOs are up there massively,
Yeah,
and
sure.
everyone's selling the
Yeah.
bottom. So yeah, I think right now, of course, if you look back, you will in about 2 years' time, whatever it is, we'll look back and say, of course that was the low. It was obvious. Everyone was
Yeah.
so bearish. People are most bearish at the bottom. People are most bullish at the top. And so you've got to flip that sort of thought mentality. Anyway, individual companies. Al, what are you looking at?
Right, Just, we've spoken about Manolete Partners for,
I
well,
think it's
several times.
Manolete. I think it's Manolete. I think it's I think it's
Manolete.
French.
Okay, so talking about AIM company, AIM listed Manolete Partners. So this is, of course, the UK's leading insolvency litigation financing company, and there are lots of specialist financing companies around that provide financing for particular causes. And of course, this is where the company can fund or buy insolvency claims. It works a three-way partnership with IPs and lawyers, and it's a simple, fast, and effective service. The company published its results about a month ago. That's the results for the full year, and it also gave an update on current trading, which is very telling. Now, the share price really responded in some ways to that by falling away, but I think a little prematurely, and I think it does offer a very good opportunity now at these levels. So we've seen the shares trade as high as £2 on the year. We've seen it trade as low as 97p on the year. Currently trading at just over £1, £1, 2.5p a share. So revenues, there's a bit of an issue around how the company declares its revenues, because at any one time it's got a number of cases going, and of course some of the revenues are in from that case, some of the revenues are declared, but of course not all the revenues are in. So when the company declares its results, it declares revenues or realized revenues on completed cases. Now, these fell by 10% on the year to 24.2 million. The reason being there was a huge case last year that disproportionately impacted on the turnover. But overall, in terms of when set against context against the previous year, overall revenues were 11% higher. 92% of total revenues are from realised revenues at completed cases, whereas in the previous year it was 129%. So really, that's very much a lowball figure. Also significantly, the company declared an EBIT profit. It was an EBIT loss of 3.1 million last year, EBIT profit of 2.5 million this year. The company's got cash of 1.4 million. It's also got borrowings of 13.7 million. So net debt of 12.3 million. And also a 90% increase in live cases on that year. Now, we come to current trading. For the first 5 months of the year, the company's recorded the highest ever number of new case inquiries year to date. 348 cases year to date versus 246 this time last year. So that's a big uptick. 103 new case investments already in the first 5 months. There were 146 in the total of last year. So if that continues, we're not even this was at 5 months, not even halfway through. So we could be looking at well over 200 completed cases or 200 new case investments on the full year. Net receipts so far this year of 6.5 million year to date, the 4.6 million for the first 6 months last year in 2024. So all of the indicators, the key performance indicators, are looking very much up on last year. And the company said, given the metrics, given where it stands at the moment, it believes it can look forward to a sustained period of growth. Now, that sits very much at odds with the share price, which has fallen to £1 just off that year low. So I do believe Manolete Partners does offer a really strong opportunity at the moment. And if, as we were talking about just now, we see that recovery, we see those interest rates fall, then this could be certainly Manolete Partners could be very much a beneficiary of such a move.
Yeah. I mean, you can see they've certainly got tailwinds in that they are one of the biggest operators in that field. But also, like I said, I think it was like administrations at 30-year highs or something, record highs. So they are ideally placed. I mean, they're concerned. I don't know why the share price fell off. I think it is the cash collection. There is a lag between they have to obviously recognize revenue on case wins, and then there's
Yeah,
a lag of collecting cash. Um, so I just
but
think
that's
maybe that was an issue there.
I think a lot of companies that provide this sort of service or litigation funding, again, there are often delays in receipt of revenue. So the company has to be careful, of course, how it declares that money. But if it doesn't come in one year, it'll be there the following year. So it will still come in overall. So it's really looking at that trend and how you can identify growth from the way that comes in. I think if you look at the number of new cases up on last year, the number of completions at 5 months already compared to last year, all the signs are that the company's in for a very strong year this year. And I'm sure once we get a trading update a bit further down the road on the new year, then if their share price hasn't turned around already, I'm sure it will at that point.
Yeah. Importantly as well, though, like I said, they're not only getting more cases, the cases are getting bigger, which means the margin's better as well.
Yeah,
And that
indeed.
will help them a lot because they went through a period of during COVID, a lot of these zombie companies, it was quite small, went through, and so they'll get through those. But now they're reverting to mean on the size of the company, but also they are, there's more cases. So yeah, now I'm watching it with interest, and I'm waiting for there's a broken note coming out very soon on it. It's not out yet, but yeah, I think the fact that it went from a loss to a profit is a good sign. Okay, what's next, Al?
Okay, we've also spoken about Zoo Digital before, and just this is also an AIM company, AIM listed Zoo Digital. So shares so far have traded a year high of 74p, year low of 21p. Currently trading at just off that year low at 30p, but the shares have been in a downward trend really during September. But I think the company is well placed again to deliver a strong recovery from this level. So Zoo Digital was founded in 2001. It's got operational hubs in Los Angeles, London, Dubai, Turkey, Southern Korea, India, Denmark, Spain. It also has a technology development centre in Sheffield here in the UK. And it provides media and streaming platforms for studios. A lot of its clients are Hollywood studios, and of course, streaming platforms. Provides a full service proposition, end-to-end services for original and catalog content, and that includes, of course, dubbing and subtitles for foreign language platforms. And it's played, really has played in the years since its formation. It's played very much a cornerstone role in the digital transformation of the sector, and it's also still very much uniquely placed as the go-to provider for these sort of services. So again, we had a very strong trading update from the company. This is going back about a week and a half ago. The company published an AGM statement and trading update, and it said at this point the company that the streaming industry itself continues to undergo a transition following realignments and also the strikes of 2023. Now, if you remember, we had the Hollywood writers' strike that impacted on a number of companies, and certainly Zoo Digital was one of those companies. So there's been a realignment and a restructuring after that. But the company reported a strong recovery during the first half of the year, sales of at least $27 million, up 28% from last year, and also up 42% on the previous half. So that revenue-wise is a really, really strong recovery. It's also going to report an EBITDA profit in the first half of the year, and the company currently has got cash of at least 2 million quid. Sorry, $2 million.
Dollars.
Dollars, yeah, dollars. And it's expected to be on track for the full year ending March 31st, 2025. So strong financial position. The company's also just published an innovative cutting edge white paper on AI. It's entitled "Will Robots Take Over the World of Localization?" So they've got a very strong view and a very as a cornerstone player in this market, I think they've got a very informed and strong ideas on how AI is being incorporated into the streaming industry and into the overall revolution in digital technology. But again, the shares haven't fallen to lows yet, but I think any change in interest rates and also once the US election outcome is resolved, I'm sure the Hollywood studios will be throwing more work their way, so we could well see an even stronger second half to the year.
Yeah, I did. Do you know what? One of the companies I was looking at because it rallied strongly. I interviewed the CEO back here, I think it was, and just after I interviewed him, the share price just took off. It had nothing to do with me, but it just took off and kept going up. I
Yeah.
thought, wow. And it's often when you see these companies that move like that, I think, hey, it's worth watching. So I did buy. I bought some of these on this trading update they did, a strong trading update, which rose. What did I got by? I bought here.
Mm.
Yeah, about 50%. I bought half it in the first thing in the morning,
Yeah.
and I put a stop loss in about 60 pence, and so well, I must have bought about 30 pence, and I put a stop loss in at 60, and I've come out, and it's gone down since then. I do think they probably need to raise some money. That's the trouble. And have they ever
Well,
been
they got
profitable? I
cash
don't know
of
if they have.
cash of $2 million, so I mean they're okay for now. But
Yeah, but they are. I mean, they're still losing money. I mean, I don't think they've ever been profitable, have they? So
well,
it's
no, I mean on the previous year. So just looking back at the last set of results, they've yeah they've got net cash of 5.3 million, which is better than indicators. So they've got a reasonably strong cash position. There's
Yeah, but they
no
lost about 920. They lost about 20 million. Of course, it's down about a strike, but
yeah
I think
yeah
there's a fast turnaround to become
they've got a
profitable.
debt
And when they've got
facility.
$2 million left,
They've got a debt
s-
facility of 3 million. So
yeah, they
so
probably need to use that then
but
because
but they've got $2 million cash as well. So I mean,
yeah, they
that's
probably yeah. I just
yeah,
think
yeah,
yeah, I don't think they'll turn around that fast because it's going to be So if they had what do they have? What's this? Is end of March? They had 5.3,
yeah.
and now they've done 2. So they burned since where are we now? April, May. When was that AGM thing? Was it? Let's do the maths on this now. Why are we going? Trading update for when? Uh, uh,
That was a trading update. So yeah,
till when? Was it?
that's up to that's it's a trading update following the AGM.
30th of
So they
September.
held the
Okay.
AGM. So they're going to run through to March.
April, May, June,
Their
July,
year ends
August,
March
September.
2025. So yeah.
Yeah, 6 months. 6 months. They've burned what
So
3.3.
27 million. If they can, well, they'll deliver at least that. So we could be looking at well over 50-55 million.
Yes, on the last, since March, they've been burning of sort of £550,000 dollars a month. So that's going to come down quite a bit. So
Mm,
when they
mm.
lost what less than 2-3 months on that cash burn. So hopefully that's come down. But yeah, I think they may need some cash there. But they say they've got a debt facility which they haven't drawn, which in fact was one of the reasons why it had another rise after they announced the trading update. What I said. Uh, there's something here. Oh, train update and depth. So yes, it had a rise, and then they revealed this on the 13th of May, which was I think where is it? Yeah, here, and it's rose up again nicely. Let's have that trading thing. Where is it? Debt facility. Up to 3 million.
Yeah, debt facility is 3 million. Yeah,
Undrawn. So there we go. They got a
yeah.
debt facility there. Yeah, yeah.
So it's undrawn. They've got $2 million cash. So they've got potentially 5 million to draw. And I think they'll be okay. I think they'll be okay. And there's given that strong
Yeah,
recovery,
but you know the
it
way things are with business. I always look on. It's when if you're overly optimistic and you think they'll be okay, sometimes it goes against you, goes wrong. You're better off to be
sure.
conservative and thinking, oh, then
Be conservative, by all means, be conservative. But I think you've also got to consider the fact, the probably a lot of Hollywood studios are perhaps sitting on their hands at the moment and not pushing as much business out as they might do. There when you see the outcome of the election. I think the outcome of the US election is going to resolve a lot of issues, and I think it doesn't matter probably which way it goes for the Hollywood industry. They'll just keep on making films and keep on bringing studios in.
yeah. I also think that Yeah, that white paper maybe because people have been worrying about is this business will this business just be taken over by AI? So they are heading the worries off a little bit, but it also sort of highlights the worries a bit.
Yeah.
Thinking okay, they've acknowledged that AI is probably a bit of a worry, but they are working at they are using AI, so it's not a bad thing. Cool. What's next now?
Okay, so want to finish with a company called Mendell Helium. The epic code is MDH. Now, this is formerly Voyager Life,
MD.
which pivoted. It's an Aquis company, and it has
Aquis.
a
I can't get
yep.
this on the charts.
Okay, it has a tiny market cap at the moment of just 1.3 million, and the share price of currently just 3 pence.
What's it called? Mendell. How much?
MDH is the epic code.
Yeah, but how do you spell the name?
Mendell, Mendell.
Mendell what?
Helium.
Oh, they're on the helium bandwagon, are they?
Yeah, that's it. So helium, of course, is the disappearing element. It has multiple applications in defense, medical, and other applications. And of course, helium is it can't be manufactured. You can't make a synthetic helium. So Mendell Helium is acquiring the former Voyager Life is acquiring M3 Helium, which is a company that was co-founded by Paul Mendell, and is acquiring M3 Helium through the issue of just over 57 million shares, which is 57% of the enlarged share capital of Voyager Life. At the same time, Voyager Life has a manufacturing facility in Perth. It has e-commerce and wholesale operations in Perth, and also 3 retail stores in Scotland. All of those are being sold off. They're profitable. They're generating sales, but it's considered now that they're not really suitable and don't necessarily offer the growth potential for a public limited company. Hence the pivot into helium. Now, Paul Mendell is also going to be joining the board of M3 of Mendell Helium once the acquisition is complete. And that's expected now to take place by the end of January 2025. Paul Mendell's got interest in over 200 producing oil and gas wells in the US. He founded a company called Mendell Energy, a Denver-based oil and gas producer that was acquired for $12 million in 2012. So all of this happened back in June. Voyager raised 864,000 through a subscription at 3p. So the shares are now exactly where that subscription took place. The chief executive Nick Tulloch and the chairman Eric Boyle each invested £25,000 into that fundraise in order to fund the development of M3 Helium. So M3 has 6 wells in Kansas in the US. There's a field called the Hugoton Field, and the North Play has up to 1,000, if not more, possible wells. It's already produced 27 trillion cubic feet of helium-bearing gas. The M3 has a commercial processing agreement with a listed company called Scout Energy that owns the Jayhawk processing plant. There's also the Hugoton Field East Play, which has 1 producing well and 2 wells near to completion, and also near to Wiretap Territory, Fort Dodge, where there are 25 possible wells, and the existing Rost well that's there at the moment is producing helium at an exceptional rate of 5.1% helium content, and that is exceptional in commercial terms compared to the normal 2, maybe 3%. So the company provided a trading update last week. 3 wells currently in production and generating revenue. So this company is already generating revenue. There's a further wells kicking off shortly. 2 of the wells, the Smith well and the Nielsen well, are operating. The Nielsen well in particular, the company's undertaking a larger frac because the well is exhibiting extraordinary characteristics there in terms of the quality of the helium gas produced. Now, what's particularly notable about the Nielsen well frac is that local investors and one of the contractors working on the well have basically provided the funding to complete the second frac. So that is non-dilutive, of course, to the enlarged company when the transaction is completed in January, and they funded that to the tune of $170,000. Now, all of the wells, both Hugoton or across the Hugoton field, are proximate to the Jayhawk processing plant, so it's pretty much a plug-and-play solution. And with the Fort Dodge wells, there is an on-site purification plant there to basically purify and process the helium. So, what is really the investment proposition that's on offer here is a helium company that, unlike other listed helium entities such as Helix Exploration, that are already sort of showing substantial premium to their initial valuation, this company is still trading at the level at which the deal was done. In other words, they raised the 864,000 to fund this deal at 3p, and the shares are traded there now. Now, that's whether it's due to Aquis, whether it's due to investors waiting for the transaction to complete at the end of January, when it is uncertain. But either way, this is a company that's producing gas, it's generating cash, and also there's enough cash in Voyager already, and there'll be further cash once the sale of the cannabis shops and also the processing plant in Perth are sold off. So it's a really exceptional opportunity on offer
here. Yeah. Okay. Well, yes, we're playing devil's advocate now. Helium has become almost the lifeboat for companies underwater. They pivot into it, hoping to get a rise in the share price. Is there any material value there? I don't know. Is there?
Well, there is, yeah. The wells are producing. I mean, if you just look at the data, and also look at the social media too, and you can see the work that's being undertaken there. But also, Paul Mendell, who is a hugely successful investor and geologist and person within the industry, has put his name on the door. You know, the company is in his name, Mendell Helium. So this is going to be a pretty big company, my word. And I think there's a real opportunity now to buy in at the same level at which the funds are raised. And once the deal completes, I think we're going to see the share price move rapidly to reflect the increased value in the entity.
Yeah, well, I suppose they've got that on their side, that they are literally 1.3 million market cap.
Yeah.
Cool. Lovely. They need to change this on Aquis. They need to update their Voyager Life thing now, because it's still about Voyager. It's about Mendell and talks about Voyager Life. So
yeah. I think
yeah,
that's that's an Aquis thing rather than the Mendell Helium thing.
Yeah. Well, you just let them know, Al. Yeah.
I'll have a word.
Marvelous stuff. Thanks for that, Al. And Tottenham playing today. Of course, it's Saturday today.
No. Well, they're playing tomorrow, just down here in Brighton, and I'm going to see them. So I'm going to be in the North Stand. I probably won't take my Spurs shirt because I'll get lynched there. But I'm also a Brighton fan too, you see. So it's kind of the best of both worlds. But it would be good if Tottenham can at least get a point. You know, a point is the best all-round result, really, isn't it? But anyway,
yeah,
we'll see.
Half kicking off, but good result against Man U, wasn't it? 3-0. Wow.
Absolutely smashed them. But I mean, Man United are all over the place at the moment too, and but I think they didn't play well, Man United. But also, when you got a player like Mickey van der Ven stampeding through across the field, I mean, the first goal was incredible. It was all Mickey van der Ven. You've got somebody like him stampeding up the field. He's a big. It's like Jonah Loma with the football. You know, you're not going to stop him. You know, and he just got to the line, perfect ball across, and all Brennan Johnson had to do was tap it in. So yeah,
marvelous, cool stuff. Cheers, Al, and we'll speak to you soon. Not speaking next week. We're doing these monthly now. Speaking monthly.
Speak very soon, Just, and enjoy your weekend and come on, you Spurs.